Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Today is February 24th, 2023, and we're going to cover trade number 4, along with some of the strategies around the entries and exits for trading. So let's take a look at trade number 4. As you know, we make our trading decisions at the end of each day. When we are watching the trades live, we'll see this happen in real time at the end of the day on the current candle with an aftermarket order. I just want to point out something though. In the following days on the chart, those entries and exits show up on the next day's candle at the prior day close. You can see this really clearly with the exit that we had on the 9th, and in our prior video displayed that on that current candle, but now it's showing up on the 10th. It's the next day, but you'll notice it's at the price of the close of the prior day. This is a little bit confusing. It's certainly not the way that I would like it, but that's just the way the chart works, and I thought I would explain that before we get into trade number 4. When we exited our prior trade on the 9th, we're always looking for a better entry price. Sometimes that happens where the market will go down a little bit and we'll get in at a better price. Sometimes the market goes up and we end up getting in at a higher price than our exit. Well, that's what happened when we entered it on the 14th. You can also see that in the live trade, that actually happening on the 14th. You can also see how it appears on the next chart's next day's candle as we roll forward. So just a little bit about strategy. This is already a bit of a risky entry. It's not one that I typically like to make. We know that trying to predict what's going to happen on the next day is also completely impossible. We're certainly hoping for a continual run-up when we make an entry like this, but what as you will see is it was downhill from the entry. So for the next couple of days, the market continued to fall a little bit each day, and so let's talk through some of the strategies about losing. What do you do when you're in a losing trade? I think there's two options. One of them is to figure out where is a good exit to minimize our losses. But the other part of it is how much of a drawdown am I going to tolerate, because sometimes price will rebound and I may end up in a very good trade. I've seen this work out both ways, where exiting too soon can be a complete miss because the market rebounds and the gains, you completely miss out on those gains. I have also seen not exiting soon enough just means continual losses. So as you know, Adam makes our trading decisions. He's doing the best he can, trying to make the right choices. So a few days later, after taking some losses, we're looking for a good exit. Some people like to use stop losses, and they can be helpful. I've seen them sometimes work out well, and again, sometimes a stop loss will get triggered, market rebounds, and you're out too early and completely miss some opportunity. But as you'll see, Adam does not use stop losses. Instead, we look for a good place to exit at the end of a day. That's exactly what happened on the 23rd when we decided to take the exit. Unfortunately, this was a massive loss. It was a minus 6.65% loss. That was hard to sustain. But again, who knows if that's a good exit or not until the following days and what happens, what the market ends up doing after that. So once we're out, the next big question is, what are we going to do to get back in, and what are we looking for? So we could see a continual climb in price and miss out on some gains if we're not in, or we can continue to see prices drop, in which case the lowest the price we can get in, the better. We're always trying to buy at a lower price and get a good opportunity there. As it turns out, today we saw a pretty big gap down, We avoided some additional losses. Those could be approximately 2% that we are not taking because we're sitting in cash, and we're looking when to make our next entry. So the approach of looking for a better price to exit and going back in seems to be the one that over time typically beats the market. We are not ahead of the market as of today. We're definitely taking some losses. As you know, I'm trading. These are real trades with real money, and I'm just candidly sharing the results. Right now, I would say we are doing very poorly. We are currently down over 1% for the year, while the S&P 500 is up almost 5%. We are trailing the S&P by 6%, and we have a lot of catching up to do in the coming months. I'll continue to share these actual results with you regardless of the performance. I plan to do this for at least 6 months just to see how we do, and hopefully we will start seeing us beating the market. So let's stay tuned and see how we do on the next trade. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.